Welcome. Today we're diving into the world of Apple as an investment opportunity.
Yeah, okay.
You probably use their products every day.
Yeah.
But the intricacies of their financials and future prospects might just surprise you.
Apple is indeed everywhere you look. But behind that sleek design and that user-friendly interface lies a financial behemoth with a scale that's often overlooked.
Right. Their latest 10K filing reveals some eye-popping numbers. To start, they have a massive workforce of 164,000 full-time equivalent employees.
Wow.
That's a city of talent dedicated to Apple.
A city generating a staggering, get this, $391.035 billion in total net sales for the year.
Wow.
That translates to a huge gross margin of $180.683 billion and a net income of $93.736 billion. These figures are truly in a league of their own.
So Apple is clearly a global force. But where are these sales coming from?
Good question.
Their financial reports break down net sales by region. We can see how this has shifted over the past few years. For example, in the Americas, their 2024 net sales were $167.045 billion. That's a 3% increase from 2023, but a bit lower than their 2022 figure of $169.658 billion.
It's interesting to see how different regions contribute to Apple's overall revenue.
Yeah.
While the Americas remain a stronghold, their performance in Greater China paints a different picture.
Oh.
Their net sales there have seen a decline.
Okay.
$66.952 billion in 2024, down from $72.559 billion in 2023 and $74.200 billion in 2022.
That decline in Greater China really stands out. What factors do you think are at play there?
Well, it's likely a combination of factors.
Okay.
Macroeconomic conditions in China, geopolitical tensions between the U.S. and China, and increasing competition from local Chinese brands are all contributing to this trend.
So it seems like Apple needs to carefully navigate these challenges in Greater China,
Right.
while simultaneously capitalizing on growth opportunities in other regions.
Exactly.
What about their performance in Europe?
Europe has been a bright spot for Apple, showing consistent growth. Net sales there reached $101.328 billion in 2024, a 7% jump from $94.294 billion in 2023. This upward trend contrasts with the stability we see in Japan, where net sales have hovered around $25 billion for the past 3 years.
It looks like there's quite a diverse range of performance across different regions.
Definitely.
The rest of Asia-Pacific region also seems promising, with 2024 net sales hitting $30.658 billion, up from $29.615 billion in 2023.
Yeah.
This suggests that Apple is finding success in tapping into emerging markets.
Absolutely. This geographic breakdown really highlights the importance of understanding Apple's global strategy.
Right.
They're not just an American company, they're a global player with a carefully calibrated approach to different markets.
This global perspective makes their strategic focus on innovation even more intriguing. Their 10K shows a massive $31.37 billion dedicated to R&D in 2024.
Wow.
This underlines their commitment to staying ahead of the curve.
What's fascinating here is that this commitment to innovation is both their strength and their potential vulnerability.
How so?
On one hand, it allows them to create groundbreaking products and maintain their premium brand image.
Yeah.
But on the other hand, what if these massive investments don't translate into successful products? That's a risk investors always need to consider.
That's a great point. It's a high-stakes game of pushing boundaries while ensuring that those innovations resonate with consumers and translate into profits. And speaking of risks, there's also the balancing act Apple faces with its software ecosystem.
Right. They rely heavily on third-party developers for their app store, which is a massive revenue generator.
Yeah.
Yet they also need to ensure their own software and services remain competitive.
Right.
This creates a constant tension, a need to foster a thriving app ecosystem while simultaneously safeguarding their own interests.
It's a tightrope walk for sure. This reliance on third-party developers could be seen as both a strength and a weakness.
Precisely. It's a dynamic relationship that investors need to scrutinize. It raises questions about Apple's long-term control over its platform and how they'll navigate potential conflicts with developers. This brings us to the broader competitive landscape Apple operates in, which is incredibly fierce.
It really is. They're not just competing in the smartphone market anymore. Their 10K acknowledges that they hold a minority share in the global smartphone, PC, and tablet markets. They're up against giants like Android in smartphones, Windows in PCs, and face competition in the tablet market from a variety of players. Then there's the gaming arena, with powerhouses like PlayStation, Nintendo, and Xbox.
If we connect this to the bigger picture,
Yeah.
Apple's essentially battling on multiple fronts, which raises an important question. Can they maintain their dominance or even just their relevance across such a wide range of markets?
That's the million-dollar question.
Yeah.
They've certainly demonstrated an ability to adapt and innovate.
I have.
But as you pointed out earlier, there's always the risk that those innovations might not hit the mark. It's a constant race to stay ahead.
And this race is further complicated by the fact that they're not always the market leader. That minority market share you mentioned could make attracting developers and maintaining a competitive edge more challenging.
It seems like Apple's success hinges on a delicate balance of factors. Their ability to continue innovating, their relationship with third-party developers, and their performance across a diverse range of markets. It's a complex equation.
Absolutely. And it's this complexity that makes analyzing Apple as an investment so fascinating. There's no easy answer, no guaranteed outcome. It's a company that demands constant scrutiny and a deep understanding of the interplay between its internal strategies and the external forces shaping the tech landscape.
So we've got this intricate mix of impressive financials, strategic bets on innovation, a competitive landscape that's constantly shifting. Let's dive into what this means for you as a potential investor.
When assessing Apple as an investment, their past performance is undeniably impressive. Their 10K highlights a 5-year cumulative return of 330% as of September 28, 2024.
Wow.
Surpassing both the S&P 500 and the Dow Jones U.S. Technology Supersector Index. However, past success doesn't guarantee future returns. There are inherent risks to consider.
So how do we reconcile this incredible track record with the potential challenges we've discussed? Where do we even begin to unpack the factors that could impact Apple's future?
We need to look beyond company-specific factors and consider the broader economic and geopolitical context.
Okay.
Apple's 10K explicitly points to macroeconomic conditions as a significant source of risk.
Like what?
We're talking about inflation, interest rates, and currency fluctuations, all elements that are largely beyond Apple's control.
Inflation, for example, can directly impact consumer spending.
Yeah.
If people are feeling the pinch, they might think twice before splurging on a new iPhone or MacBook.
Exactly. And if we consider rising interest rates, the effects are twofold. Firstly, borrowing becomes more expensive, which can potentially hinder Apple's investment decisions and expansion plans.
Right.
Secondly, higher interest rates often lead investors to favor more conservative investments, potentially shifting away from growth stocks like Apple.
It seems like a delicate dance between consumer confidence and investor sentiment. Both are essential for a company like Apple to thrive.
And let's not forget about currency fluctuations. Changes in exchange rates can make Apple's products more or less expensive in different parts of the world, impacting sales and profitability across various regions. The global nature of their operations makes them particularly susceptible to these fluctuations.
It's a stark reminder that even a company as powerful as Apple isn't immune to the unpredictable nature of the global economy.
Right. The macroeconomic environment acts as a constant undercurrent, influencing their every move. But there's another layer of complexity we need to factor in: geopolitical risks.
Their 10K specifically mentions tariffs and trade disputes as potential disruptors, particularly those involving the U.S. and China. This is especially significant considering a large portion of Apple's manufacturing occurs in China.
Any escalation in these tensions or the introduction of new tariffs could significantly disrupt Apple's supply chain and inflate manufacturing costs. The ripple effects would be felt throughout their operations, potentially impacting their bottom line and ultimately their stock performance.
The interconnectedness of global trade and politics adds a whole other dimension of risk for investors to consider. It's not just about Apple's products and strategies, it's about navigating an increasingly complex global landscape.
And within this landscape, the issue of intellectual property looms large. The tech world is rife with legal battles over patents and potential infringement claims. The 10K acknowledges that Apple is not immune to this reality. These legal entanglements can be costly distractions, draining resources and diverting attention away from innovation and growth.
The 10K dives into a specific legal battle involving the European Commission. They ruled that Ireland granted Apple favorable tax opinions, essentially state aid,
Wow.
and ordered Ireland to recover a hefty sum in back taxes from Apple.
This case highlights the significant financial and reputational risks associated with legal and regulatory scrutiny. The recovery amount was a staggering $14.2 billion,
Wow.
which Apple was obligated to pay to Ireland. This underscores the importance of understanding the regulatory environments in which Apple operates, as these factors can have a material impact on their financial performance.
It's like navigating a minefield of legal and regulatory hurdles in addition to all the other challenges we've discussed.
Precisely. Investing in Apple requires not only an understanding of their products and financial statements, but also a grasp of the intricate web of legal and political forces that can influence their operations.
So far, we've focused on potential risks and challenges. But let's not overlook Apple's inherent strengths. They remain a global leader in innovation, design, and brand loyalty, commanding a loyal customer base willing to pay a premium for their products.
Their brand is undeniably one of their most valuable assets. They've masterfully cultivated an image of sleek design, user-friendly interfaces, and a seamless ecosystem of products and services. This allows them to maintain premium pricing and capture a significant portion of the market.
And they've demonstrated an impressive ability to adapt to evolving consumer preferences, successfully expanding into new product categories.
Right.
Think wearables with the Apple Watch, services like Apple Music and Apple Pay, and their ongoing foray into augmented and virtual reality.
This continuous expansion into new markets speaks to their strategic foresight and their ability to leverage their brand power. Their commitment to research and development, with over $31 billion invested in 2024, further underscores their dedication to innovation and staying ahead of the curve.
But innovation alone isn't enough. Apple's success also hinges on their ability to attract and retain top talent, which is crucial in the fiercely competitive tech industry. Their 10K emphasizes their approach to human capital management, highlighting their commitment to fostering a positive and inclusive work environment.
They recognize that their workforce is a key driver of their success, and they're investing in employee well-being, diversity and inclusion initiatives, and competitive compensation packages to attract and retain the best minds in the industry.
This focus on human capital, alongside their financial strength and innovative spirit, paints a picture of a company that's well-positioned for continued success. But it's crucial to remember that Apple's future isn't guaranteed. Their path is littered with potential pitfalls, and investors need to carefully weigh the risks and rewards before making any decisions.
Absolutely. Apple's story is a fascinating tapestry of financial prowess, technological innovation, and strategic maneuvering within a complex global landscape. Understanding this intricate interplay of factors is essential for anyone considering Apple as an investment opportunity.
Speaking of their financial prowess, their 10K provides a detailed breakdown of their debt obligations, an area we haven't touched upon yet. It's an important aspect to examine, as debt can be both a catalyst for growth and a potential burden if not managed effectively. Their 10K shows that Apple utilizes both commercial paper and term debt to finance their operations. For those unfamiliar, can you explain what those terms mean?
Yeah, so commercial paper is like a company's short-term IOU. It's a way for Apple to quickly borrow money to cover immediate needs.
Okay.
Term debt, on the other hand, involves more long-term borrowing agreements, typically through bonds, to fund larger investments like acquisitions.
So how much debt does Apple actually have?
As of September 28, 2024, their 10K indicates $10 billion in outstanding commercial paper and a substantial $85.75 billion in term debt.
That's a significant amount.
Yeah.
Should we be concerned about this level of debt?
Well, it's important to look at debt in relation to Apple's overall size and financial strength. We need to consider metrics like their debt-to-equity ratio, which compares their debt to shareholder equity.
Right.
While the 10K doesn't state the ratio directly, we can calculate it using their balance sheet information.
Okay.
As of September 28, 2024, their debt-to-equity ratio was around 1.6.
What's that ratio tell us?
A ratio above 1 means Apple has more debt than equity.
Okay.
This isn't necessarily a red flag, though, for a company like Apple with strong cash flow and profitability.
Right.
Debt can be a strategic tool, allowing them to leverage assets and invest in growth.
But too much debt can be risky, right?
Absolutely. If earnings take a hit, a high debt load could become a burden. It's all about balance. Investors should carefully analyze Apple's debt structure and their ability to manage those obligations. Their 10K mentions using derivative instruments to manage some of their debt-related risks.
Can you shed some light on what those are and how they work?
So derivatives are financial contracts whose value is tied to an underlying asset. Apple uses derivatives like interest rate swaps and foreign currency forward contracts. Think of it as a way to hedge against potential losses from fluctuations in interest rates or exchange rates.
So it's a way to minimize volatility associated with their debt.
Exactly. It's a common practice for large corporations managing substantial debt exposure. It adds another layer of complexity to their financial strategy.
It seems like Apple is playing a complex financial game, balancing debt, innovation, and global market forces.
That's a great way to put it. And it's this intricate interplay that makes Apple such a fascinating case study for investors.
We've covered a lot of ground today, from Apple's financials and strategic goals to their industry positioning and the competitive landscape. We've even delved into the nuances of their debt management. But I want to leave our listeners with one final, thought-provoking question. Apple is renowned for its sleek designs and cutting-edge technology. But what about the environmental impact of their products?
That's an increasingly important question for investors to consider. It's no longer just about financial performance. Environmental, social, and governance factors, or ESG, are playing a much larger role in investment decisions.
So as we wrap up our look into Apple, it's worth pondering this. Can a company that prioritizes innovation also be a leader in sustainability?
That's the challenge for Apple and many others in the tech industry. How do they reconcile their pursuit of technological advancement with their responsibility to minimize their environmental footprint?
It's a complex issue that warrants careful consideration. And with that, we'll conclude our exploration of Apple Inc. Thank you for joining us today.